The US dollar's rally has stopped. In the morning, it is trading in the red zone against its rivals. On Tuesday evening, it gained momentum despite the decline in sales in the secondary housing market. The Australian dollar seems to be an outsider among other major currencies. The world's largest countries are intending to weaken their national currencies as the risks of economic growth increase. It will be difficult to devalue the greenback in particular. Despite the Fed's soft rhetoric, the US dollar has surpassed its rivals. Now it is called the most overvalued currency. All major world central banks declare their intention to ease monetary policy. Last week, the Bank of Korea surprised the market with a key rate cut. Investors are expecting the ECB to cut its key rate by 10 basis points, however economists are doubting it. Traders assume that the Fed will soften its policy by a quarter of a percentage point. If market participants shift their attention to the upcoming meeting of the US regulator, where the likelihood of a rate cut is much higher, the euro-dollar pair may edge up. This morning, the US dollar index has consolidated at 97.69 against a basket of 6 major currencies. Nevertheless, the greenback gave in to the yen. The dollar-yen pair fell down after significant gains. However, the words have changed slightly compared to yesterday's closing, reaching 108.12. The US-China trade talks are closely watching the investors in both countries. Next week, the US government delegation will fly to China. The parties are unlikely to make immediate progress in their trade relations, but their meeting may improve the market sentiment. The Australian dollar dropped yesterday following the New Zealand dollar. Today, the AUD-USD pair continues to trade in the red zone, slightly slowing down and locating in the area of 0.6981. On Wednesday, the economic calendar will be quite eventful. Manufacturing PMI in Australia fell to 51.4 points from 52.0 points in June, and the services sector decreased to 51.9 from 52.6 in the same months. The IMF has lowered again its estimate of global economic growth as trade tensions and the risk of Brexit without a deal persist. The new forecast for the current year is 3.2%. You are watching Market News on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.